The first atomic bomb was dropped on Hiroshima.
Move the humanity!
The fires of frustration and discord are burning in every
Let us
city.
not forget for a moment the toils and efforts that lie ahead.
They say that those who forget their history are condemned to repeat it. This is the History Lessons Podcast with certified financial planning practitioner Patrick Huey, author of History Lessons for the Modern Investor, and your guide to financial wisdom in the past, present, and future. You ready? Good. Let's get historical.
The king is dead. Long live the king. Burger King is changing the Whopper for the first time in nearly a decade. A new bun, some new mayo, and now a box instead of a wrapper. Same patty. No, they're not ripping up the recipe. They're just tweaking the experience. It's less new product launch and more same burger, better packaging. And maybe there's a lesson in that for how we think about money and markets. When headlines get loud, tariffs, elections, market swings, geopolitical issues, the instinct is to reinvent everything. Dump stocks, chase the latest fad, rebuild the portfolio from scratch. That's the financial version of throwing out the Whopper and starting over with sushi. But most of the time, your core patty doesn't need to change. Your long-term goals, your time horizon, your basic mix of growth assets and safety nets, those are the ingredients that actually feed your future. What may need adjusting are the small things around the edges. How much cash you keep, which sectors you overweight, how often you check your accounts. The danger is confusing a packaging change with a recipe change. Burger King can put the Whopper in a box, but it's still a burger, and it's still the Whopper. Markets can have a rough week. That doesn't mean capitalism is broken or your retirement is off track. So before you make a big move because of a headline, ask 3 questions. Is anything truly different about my goals? Has my time horizon changed? And has my tolerance for risk really shifted? Or am I just slightly uncomfortable today? The answer to those questions is no. You probably don't need a brand new menu. But you may need some thoughtful tweaks and the patience to let a good recipe keep on working. After the break, I'm back with this week's history lesson for the modern investor.
This episode is sponsored by Victory Independent Planning. At VIP, our mission is simple. Live well, do good. We build strong relationships with good people and help them turn money into what really matters. Retiring without worry, traveling more, supporting family, or funding the causes and projects they care about most. Based in Naples, Florida, and Portland, Oregon, we serve clients nationwide with comprehensive fiduciary advice, retirement income planning, custom investment portfolios, tax strategy, healthcare and Medicare decisions, and estate and legacy planning, all carefully organized around your unique goals. If you're ready for a plan that puts your best interests first, visit victoryindependentplanning.com and schedule your VIP consultation.
On March 5th, 1946, Winston Churchill's Iron Curtain speech. That was when a metaphor reframed the map. On a cold March day in 1946, Westminster College in Fulton, Missouri, hosted a guest speaker who needed no introduction. Winston Churchill, no longer Britain's wartime prime minister, but still one of the world's most famous statesmen and orators, stepped to the podium with President Harry Truman sitting in the audience. The war against Nazi Germany had ended less than a year earlier. American and Soviet soldiers had met on the Elbe. There were toasts, photographs, and optimistic talk about a durable peace. To many people in the West, the Soviet Union was an ally, if a slightly difficult one. Churchill, as he often did, saw something different.
I saw it all coming.
In the months after victory, he watched as Soviet influence moved steadily across Eastern Europe. Free elections were delayed or derailed, opposition parties were marginalized, security services loyal to Moscow grew in power. What looked from a distance like post-war reconstruction looked up close like consolidation. In his speech, formerly titled Sinews of Peace, Churchill gave that reality a name.
From Stettin in the Baltic to Trieste in the Adriatic, an iron curtain has descended across the continent.
It was a vivid metaphor for a hardening division, political, military, and ideological, between East and West. Now, the address was controversial. Many in the United States and Britain thought Churchill was being alarmist, risking a new confrontation so soon after the last war. The Soviet press denounced him. Even some Western leaders worried he was exaggerating differences that diplomacy could smooth over time. But as the late 1940s unfolded, the Truman Doctrine, the Marshall Plan, the Berlin Blockade, the Iron Curtain image increasingly matched lived reality. Churchill had not created the divide. He had simply described it clearly, in public, and before many were ready to hear it. That clarity helped shape how policymakers and citizens thought about risk, alliances, and the long game that would come to be called the Cold War. For modern investors and retirees, Churchill's Fulton speech is more than a history lesson in geopolitics. It's a case study in naming uncomfortable realities, resisting wishful thinking, and planning for a world that may not revert quickly to how we'd prefer it to be. The map changed on that day. Pretending otherwise would not have been a strategy. It would have been hope. And as we know, hope is a terrible strategy. Here are 4 lessons for the modern investor from Churchill's Iron Curtain speech. First, don't ignore structural shifts. Churchill's point was that something fundamental had changed in Europe's political structure. It wasn't just a bad week of headlines. A whole region was moving under a different system. Now, in markets, we sometimes treat deep shifts like demographics, deglobalization, technology, inflation regimes as if they're just temporary noise. A good plan doesn't assume every change is fleeting. It looks for signs that the map has genuinely shifted and adapts exposures gradually rather than clinging to a world that no longer exists. Second, name risks honestly and then plan around them. Now, the Iron Curtain metaphor didn't make the divide appear, it made it harder to ignore. In your financial life, the equivalent might be acknowledging that you're too concentrated in one company, too dependent on one source of income, or taking more risk than you can truly stomach in a downturn. Once you name the risk clearly, you can build your guardrails, diversification, cash buffers, insurance, spending rules, instead of relying on hope or denial. Third, balance deterrence and engagement. Churchill argued for strength and unity among Western democracies, but he also emphasized the importance of diplomacy and shared institutions. The goal was not constant confrontation. It was credible deterrence and patient engagement. In portfolios, that looks like holding enough growth assets to meet long-term goals, while also holding stabilizers like bonds, cash, or defensive sectors that help you live through volatility without overreacting. It's not all in or all out. It's a thoughtful mix calibrated to your real-time horizon. Finally, think in decades, not just election cycles. The divisions Churchill described did not resolve in a year or in a presidential administration. They defined global politics for nearly half a century. Similarly, many of the forces shaping your returns, an aging population, productivity trends, fiscal paths, will play out over decades. If your plan is built on the assumption that every worry must disappear by next quarter, well, you'll be forever disappointed and you'll be tempted to flinch. Building a strategy that can live with an imperfect, noisy world over long stretches is often more realistic and more rewarding than waiting for a clean slate. Here's my final thought this week. When Churchill spoke in Fulton, he couldn't know exactly how the next 40 years would unfold. What he offered was not a precise forecast, but a clearer description of the terrain and a call to think and act accordingly. Your financial life deserves the same treatment. You don't need to predict every twist in politics, trade, or technology. You do need to be honest about the world you actually invest in, and to shape your allocation, spending, and safeguards to fit that world rather than some idealized version of one. In that sense, a good financial plan is your own sinews of peace. It's a structure that helps you live the life you want, even when the maps and the headlines are a bit more complicated than you'd prefer.
I am convinced that there is nothing they admire so much as strength.